Now we are at the point where there are threats to our hegemonic dominance. Right? People seem to think that zero was a normal interest rate. We've had 247 years as a republic. We've had two very short periods of time where they pushed interest rates to zero, right after the 1930s debacle with the Great Depression, and then again here after the global financial crisis. That's not normal. 4%, kind of where the 10-year is right now, is normal. So this idea that somehow we need to go back to 2% rates just doesn't make any sense to me.
In a recent interview, Fed Chairman Jerome Powell reiterated the Fed's stance that they plan to cut interest rates sometime this year.
The economy added in an average of 265,000 jobs per month in the 3 years through February, a faster pace than we have seen since last June. And the higher inflation data over January and February were above the low readings in the second half of last year. But these recent data do not, however, materially change the overall picture, which continues to be one of solid growth, a strong but rebalancing labor market, and inflation moving down toward 2% on a sometimes bumpy path. If the economy evolves broadly as we expect, most FOMC participants see it as likely to be appropriate to begin lowering the policy rate at some point this year.
Mark Yosko, CEO and CIO of Morgan Creek Capital, explains why this is a huge mistake. Mark explains that a lot of the data that Jerome Powell is referring to is adulterated in that it is not a true measure of the economic state. He explains that the economy is much more fragile than the data lets on, and that the desire to lower interest rates in spite of this problem is poised to take America the way of other empires. He takes us through history, cites examples of other failed empires, and explains that if the Fed decides to cut rates, our fates are all but sealed. Let's jump right in to hear it all from him.
A great place to start would be inflation. The macro environment, everyone at the beginning of the year was super excited. Inflation's coming down, Jerome Powell's a genius, let's wave the victory flag. Now all of a sudden we went from 7 rate cuts going into the year to we're down to like 3, and the market doesn't feel so confident anymore. Inflation looks much stickier. How do we gauge, could inflation come roaring back like it did in the 80s?
Yeah, I'll take the under. I really don't think so. I'll also take the under on rate cuts. I don't even think we're going to get 3 this year. There's just no impetus for rate cuts. I talk about this, the pollution of the most recent period, right? It's like all the data is polluted, right? The data on price to earnings for the stock market, it's all too high. And people look at, well, the last 10 years, and I go, but the last 10 years have been above average of the last 100 years. So it's just the data is polluted. And the same thing's true here of rate cuts or interest rate levels. Right? People seem to think that zero was a normal interest rate. We've had 247 years as a republic. We've had two very short periods of time where they pushed interest rates to zero, right after the 1930s debacle with the Great Depression, and then again here after the global financial crisis. That's not normal. 4%, kind of where the 10-year is right now, is normal. So this idea that somehow we need to go back to 2% rates just doesn't make any sense to me. But I do think on the job front, on your question on AI, as people get displaced, as human beings get displaced, that certainly will change the dynamic of inflationary pressures. My flip side, though, of that, my caution is everyone says at every new technological innovation that it's going to destroy jobs. It's true, right? I mean, machines took jobs away from people who were, plowing the fields or assembling things in factories. But here's the thing. We've destroyed millions and millions and millions of jobs through technology. But today, there are more jobs in the world than any time in human history. That's just a fact. So we'll create new jobs, and that will reverse some of that deflationary pressure.
Picking up where Max left off, he goes on to explain that the same way debasement of currency led to the collapse of ancient empires, the move to make zero interest rates, the norm, is steering America down the same path. Mark asserts that the Fed has to cut through the dirty data and have a correct understanding of the economic state. Mark has also debunked the notion that AI will somehow magically increase productivity and cause deflation. If the Fed continues down this line, it's looking very grim for the American economy. Next, Mark discusses Bitcoin and the probability of a Bitcoin standard saving us.
But that's inverse to Gresham's law. Gresham's law says the opposite, that bad money always crowds out good, right? Gold is good money, but other paper money always crowds that out. People want to use the bad money because I don't even understand the exact reason for Gresham's law, but it's a law, right? And if you look at history, that's what happens is people flock to the worst currency at the worst possible time. And that's why you get the hyperinflations eventually, Zimbabwe and Argentina and, Turkey. So what Murray says is we're going to get a reverse Gresham's law. And this good money, this Bitcoin, is going to eat all global currency, which today is about 86, 87 trillion. We'll just round it to 90 or round it to 100. Doesn't even really matter. Trillion here, trillion there. Pretty soon you're talking real money. That one's harder for me because I think we've seen how hard people are fighting just on the little stuff as, Bitcoin starts to siphon money out of the banks.
All the smart money will eventually flock to Bitcoin, but Bitcoin will not become the global currency anytime soon. And if the Fed continues down this path, a collapse is imminent. That's the summary of Mark Yusko's message today. Mark has broken down why the insistence of the Fed on lowering interest rates is a terrible idea. He's explained that arguments like improvements in efficiency through AI are unlikely to significantly deflate the economy, and that the Fed must be careful if the US will not go the way of all the empires before it. What do you think about Mark's warning? To see the latest in crypto news, watch this video here.